Fed rate hikes, global recession, summer highs, or summer lulls for crypto this year. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. If you're interested in seeing more content like weekly curated news and how it affects the crypto markets, please let me know by liking this video, subscribing to my channel, and clicking the bell notification to stay up to date on all of the latest videos. This video is sponsored by Ledger, a cold storage hardware wallet provider that recently released their latest safe and affordable device, the Ledger Nano S Plus. More on that in a bit. There is rampant scamming activity happening in the finance space and crypto space right now, with people and bots creating duplicate social media accounts of influencers and educators in the financial space like myself. The only official accounts I have are listed in the description area of these videos. Anything not listed in the description area of these videos is 100% a scam. So only use the links in the description area to access my only official accounts. And please make sure to report any scam profiles that try to follow you and message you, because their only goal is to steal your money and crypto. So stay vigilant in these crazy times, crypto fam. Awesome, it's time for Crypto This Week. I was running really low on time to write and film this episode today, so please forgive the rapid fire pace of all the stories we cover, and thank you so much for understanding. This past week, I started a new fun series called Cats Trade My Crypto, which follows an experiment I created where I let my cats trade my crypto individual retirement account. I recently started with iTrustCapital, a crypto IRA provider with the lowest transaction fees in the industry and zero service fees. Feel free to check out iTrustCapital and their crypto retirement options by scrolling down and clicking on the link below or using the QR code on the screen. And if you'd like to see the whole video where I break down the purpose and parameters of the experiment, you can check it out now by clicking on the link above. Nice, let's jump into some global crypto news. Blockchain games are leading the DApp industry, says the latest DApp Radar report. According to DApp Radar, blockchain games attracted 1.22 million unique active wallets in March, and more than half of the industry's activity came from game decentralized applications, or gaming applications with play-to-earn incentives. Splinterlands is named the #1 play-to-earn DApp, and Polygon is the Layer 2 sidechain with the top-played PTE games, such as Crazy Defense Heroes, Pegaxi, Arc 8, and Avagachi. NFTs represent an opportunity for game developers to create games with player-owned economies, where the community of holders are both the early supporters of the game, but also the main actors of its development and true stakeholders of its success. Cool. And as engaging blockchain games continue to gain popularity, naturally, we will continue to see a rise in popularity of NFTs. Just this week, we see crypto exchange Coinbase launches its much anticipated NFT marketplace. This product is more than just buying and selling. It is about building your community, said Sanchan Saxena, Coinbase's vice president of product. In the coming months, the company plans to add more features, including drops, minting, and the option to buy the tokens with a Coinbase account or a credit card. Sweet. And as art, gaming, and community building become more accessible and inclusive, aspects normally out of retail investment reach are becoming more accessible and inclusive as well. As $500 million hedge fund made accessible to everyone through NFTs, the first DeFi NFT project. How does it work? By pooling capital through their NFTs sale, they allow small investors who can't meet minimum thresholds to have access to a large blockchain-focused hedge fund. They invest 80% of the funds raised from the NFT sale in a $500 million hedge fund worth of blockchain assets, where the minimum investment starts with $100K. The interest earned from the fund is distributed to the NFTs holders as passive income. Amazing. Along similar lines, this week we see a prevalent heavy hitter in the traditional financial space bridging a gap between Twitter and cryptocurrencies as a new payment and user support mechanism. Fintech giant Stripe jumps into crypto with a feature that lets Twitter users get paid in stablecoin. Online payments firm Stripe says it will start offering merchants the ability to pay their users in cryptocurrency through the stablecoin USDC. Starting Friday, Twitter will let a certain number of creators receive their earnings from its paid ticketed spaces and super followers features in crypto. Very interesting. So all of these recent developments have some data and research firms making bullish speculations as crypto investors. 3.6 million Americans to use crypto to make a purchase in 2022, research firm predicts. A report published by Insider Intelligence shows that crypto's value as a means of payment will go up by 70% this year. The firm predicts that by the end of the year, 3.6 million US adults will have used crypto to make purchases. According to the company's principal analyst, David Morris, crypto's volatility is being alleviated by the growth of stablecoin usage. As CBDCs are being developed, more focus will be brought to crypto becoming a means of payment. We also expect that more crypto options will be layered into how people pay, like cards and digital wallets. These factors should spur high crypto payment growth rates over the next few years. Brilliant! And in anticipation of adoption and growth of cryptocurrency usage, some states are seeking help to prepare. This week, U.S. state of Tennessee prepares to hold crypto as it seeks a vendor for digital assets. As cryptocurrencies become more accepted as an alternative to traditional forms of payment, governments around the world are beginning to explore ways to bring the novel asset class under their control and make them part of their operations. One of them is the leadership of the U.S. state of Tennessee, which has started looking for a contractor that would hold cryptocurrencies on its behalf. Specifically, the RFP number 30901-49622, or the request for proposals for safekeeping and servicing of unclaimed securities and virtual currency, reads that the state of Tennessee currently holds no digital assets and seeks to prepare itself in the event that unclaimed virtual currency is remitted to the state's unclaimed property program. Indeed, the state's unclaimed property includes over $1 billion in assets, and the unclaimed property program aims to return the funds to their rightful owners or their heirs after locating them. The chosen custodian would need to hold any unclaimed digital currencies. Cool. And it's no wonder this new digital world is growing, as these unprecedented times aren't giving us many options to turn to from a wealth preservation standpoint. The Fed may need to be even more aggressive, fighting inflation as U.S. household cash exceeds debt for the first time in 3 decades, warns Deutsche Bank. A hard landing will ultimately be unavoidable by late 23 or early 24, after an aggressive series of Fed hikes over the next 18 months, says Deutsche Bank's Jem Reed. So we've got some predictions of a bust in the next year or the following, as well as predictions for a more immediate bust. The Fed always screws up. This forecaster sees inflation peaking and U.S. stocks in a bear market by summer. If you go back to June 2020, when we started making the call that inflation was going to accelerate, it wasn't until 12 to 18 months later that the Fed realized it wasn't transitory. They're playing catch up. The Fed always screws up. Their policy is too tight, too late. The longer the Fed stays vigilant, tightening into a slowdown, the faster stock prices fall. You're going to really deflate asset prices. I can't wait to see how the Fed is thinking about the equity market at 20 times earnings. So again, we've got calls for a potential recession in 2023 and 2024, as well as within the next few months. Which prediction do you think is more likely to play out? Let me know in the comments below. And also, what about dollar dominance? How long will the US dollar continue to reign supreme? If you've been tuning into this series, you know that we've been closely following the slippery slope of the dollar's waning global dominance. And this week, the Russian bank finds novel way to pay lenders and bypass Wall Street sanctions. Sovcom Bank, PJSC, will offer a bond swap to its Eurobond holders to bypass the foreign banking web that has been blocking payments of Russian borrowers after sanctions were imposed following the country's invasion of Ukraine. Russian railways and state-controlled lender VTB Bank, PJSC, sanctioned in the US, the UK, and the European Union, said they paid holders of dollar-denominated bonds in rubles in Russia. It remains unclear how easily foreign bondholders can access those funds. So more and more avenues to bypass the US dollar continue to open up. And how does out-of-control inflation add more nails to the US dollar's coffin? Well, let's explore why the Federal Reserve has made a historic mistake on inflation. It might add an inflation risk premium to America's cost of borrowing. And if even America broke its inflation promises in tough times, investors might worry that other central banks, many of which are looking over their shoulders at indebted governments, would do the same. In the 1980s, the recessions brought by Paul Volcker's Fed laid the foundations for inflation-targeting regimes worldwide. Every month inflation runs too hot, part of that hard-won credibility ebbs away. Bearish. And so what are the markets pricing in for a potential rate hike next month? Powell says taming inflation is absolutely essential, and a 50 basis point hike is possible for May. That could mean an interest rate hike of 50 basis points in May as prices rise at their fastest pace in more than 40 years. Ouch for the cost to borrow, that's for sure. But what about crypto? Will rising interest rates sink the crypto ecosystem? Competition for capital is clobbering speculative investments like tech stocks. Digital assets have held up comparatively well so far. It's really stunning to see crypto hold up better than a more conventional technology growth fund. Certainly, part of that is continuing investor optimism about crypto and blockchain, which can, to be clear, still trump granular considerations of risk and return. But there are also significant structural and transparency differences in crypto that make an impact. Most of all, a conventional startup with high spending in excess of income, or burn rate, will see its equity value drop faster in a higher interest rate environment because burn implies future borrowing. But in crypto, the burn rate of a blockchain is not collated in a single place. Arguably, it is instead spread out among the various maintainers and contributors in a way that's hard to read. In other words, it's more difficult to figure out the real financial picture of a blockchain ecosystem, particularly whether it's somehow reliant on outside financing, than when it comes to equities. So as traditional investors still try to figure out how to evaluate new digital assets, we are at a distinct advantage, already recognizing the value and potential blockchain technology has to change the world and becoming early investors. It is more important than ever to protect and secure these investments so they can grow over time, helping us achieve our goals of financial freedom and creating a better world at large. As we have touched on in previous videos, this particular scam targeted at crypto holders is heating up again this week in the news. Imposters infiltrate your phone, steal your number in new SIM swap scam. It's anything but new, however, it is increasing in frequency at an alarming rate, up over 500% since 2020. And here's another article with a bit of an untruth. Lehigh Acres couple fall victim to SIM swap scam. Lose access to phones and computers. So in this article, a couple describes how a SIM swap completely took over their lives for 2 weeks, losing access to email accounts, financial accounts, and how they are still not out of the weeds yet. The article concludes with this gross falsehood. The best thing you can do is just keep up on all of your accounts. Yeah, not true. I actually made a full dedicated video about SIM swapping, which you can check out by clicking on this link above. In it, we cover how SIM attacks work, how we can minimize our risks of becoming a victim, as well as, more saliently, how we can absolutely 100% ensure we never become a victim by using Efani. Why Efani? Well, at the time of this video, they literally have no direct competition. They are the only secure mobile service out there that can guarantee us protection against SIM swaps. In fact, they guarantee protection against SIM swaps, fake towers, eavesdropping, location tracking, spam calls, spam texts, and malware. They protect your cell phone service with military-grade verification, which involves an 11-step integrity and authentication check. They de-link your private and personal information from your phone and encrypt your data. They offer 24/7, 365-a-day support. Their company is based in the United States, and if peace of mind, knowing you will never become a victim of a SIM swap isn't amazing enough, if by some crazy chance you do become a victim of a SIM swap, your secure mobile service with Efani comes with $5 million worth of insurance coverage to protect you from any financial losses you experience from a SIM hack. All phone numbers that use Efani's secure mobile services are unlisted, which means you will not receive any robocalls from robo-dialers, and you will not receive spam SMS text messages from robo-spammers. Some people already pay $10 per month for that type of service. So if you choose to secure your phone and financial assets with Efani, it is typically only about $10 to $30 more per month than your regular cell phone service. All their plans come with a 100% money-back guarantee for the first 60 days, so there's no risk for you for 2 months if you decide to give them a go. So if you want to check out Efani, scroll down to the description area below and use the link to access their correct and official site, or feel free to use the QR code displayed on the screen. Sweet. Another security factor to be aware of, especially if you are active in the NFT gaming space this week, MetaMask stops working as Infura suffers another service outage. Infura is MetaMask's default remote procedure call, RPC, provider. In the crypto space, RPC providers serve as an interface for the likes of MetaMask to interact with the blockchain, which in this case is Ethereum. Yeah, MetaMask security incidents have been on the rise. One of the best and most secure ways to protect your crypto, in addition to SIM swap protection, is by using a cold storage hardware wallet. Like I mentioned at the beginning of this video, Ledger, a well-known and respected cold storage hardware wallet provider in the space, has recently revamped their most popular and affordable crypto wallet device, the Nano S, to the Nano S Plus. While the original Nano S only supported a maximum of 6 different cryptocurrency apps, the new Nano S Plus can support up to 100 different cryptocurrency apps, which is a substantial improvement in both capacity and, most importantly, user-friendliness. Another user interface upgrade is a larger screen than the original Nano S, which makes it a lot easier for us to navigate around the different apps, as well as send and receive and manage our crypto at large. The key distinctions Ledger wanted to make about the S Plus versus the S is that it supports a sector of crypto that has taken the industry by storm as of late, NFTs, or non-fungible tokens. With the Nano S Plus and Ledger Live app, users will be able to easily manage, store, and perform clear signing with full transparency for transactions. This allows for further protection when working with your NFT collection and Web3. All in all, Ledger's vision is to position the Ledger Nano S Plus device as the most affordable and simple way for crypto investors to safely interact with DeFi, NFTs, crypto, digital assets, and Web3 at large with a bigger screen, more memory, and smoother experience. Brilliant. So if you would like to invest in the Ledger Nano S Plus or check out Ledger's other security products, make sure you scroll down to the description area below to access the correct and official site, or feel free to use the QR code displayed on the screen. At the end of the day, we are all still early. There is a massive amount of opportunity in the crypto space, and yet so many of us will grow bored and impatient and squander everything. This week, retail interest in crypto declines as investors search for the next big price mover. Google search data and exchange activity point to the declining interest from retail traders as crypto investors search for the next big spark that will bring fresh capital into the ecosystem. Listen up, fam. Here's the deal. As someone who has been in the space since before the epic 2017 bull run, I can tell you that most millionaires are not made in bull runs. They are made in bear markets. The crypto investors that stay curious and vigilant during these times and stick to dollar cost averaging strategies through the best of times and worst of times, these are the crypto investors that do and will come out on top. So if you would like to see a video on why millionaires and financial freedom is achieved more so during bearish times versus bullish times in crypto, drop a comment and your thoughts for me below. Awesome. Thank you so much for taking the time to watch this video. If you enjoyed the content, please make sure to like this video, subscribe to my channel, and click the bell notification to stay up to date on all of the latest videos. So what did you think of this whirlwind of a news rundown? When recession? Next year? This year? When? Are you going to stay curious, vigilant, and dedicated to the space regardless of the market cycle? Let me know in the comments below. Be safe out there.